All right, this is a video supplement for the After the Bell segment that I am on, Artac Advisory, Cary Artac, that I'm on every Monday afternoon. This one is for Monday, August 24th, where I covered three markets. This particular one, obviously, the Chicago Board of Trade corn market. But I'm going to be covering, let's see here, 9 different charts that will go over the 3 different markets that I covered on the show. Those 3 markets being a Dees 20 corn, Nov 20 soybeans, and October 20 live cattle. Let's jump right into the corn contract itself. This is a monthly continuation chart for Chicago Board of Trade corn. Each bar represents a full month. It goes back to 2003, and it presently reflects the December 20 contract. In the show, I mentioned how the broader corn market remains within the confines of a longer-term sell signal below 363 and a quarter. And you can see that's just based merely on this 15-year channel bottom that held repeatedly for several years, sometimes to the very tick. Nice bounce here in the summer of 19. And then in March, we settled clearly below this structure. We retested it in July. Looks like we're going to be right back at it again, possibly by the end of August. And in fact, and while I'm not showing it, a short term, near term, the next week, 2 or 3, I am anticipating a test of low 360s, resistance 363 and a quarter. And this is an area, as I say, that can contain buying through the balance of the year, and below which the market remains heavy. How far south will we go? That's really a tough one. We have had this trend line. This is a weekly continuation chart, also reflects the Dees 20 contract. This trend line has contained, obviously, the low from last April. It's around 307.5. It is in reach, say, between now and the end of October, so long as we continue holding below this 363 and a quarter formation. But I don't put a lot of emphasis on 307.5. I think it's a monthly containment level next time down, and in fact, we may even violate it. And if so, the market continues south into the $2 handle, over the following, $2 handle is not far below 307.5. I've been mentioning on the show the 220s. I'm not even going to show that right now because it's a moot point. And in fact, given the fact that we are so close to this 363 and a quarter, I need to do my homework in terms of what if we close any week back above 363 and a quarter. I could show you all the minor levels, and by minor I mean monthly containment levels on the way up. Future audio or video segments will show that. But for right now, if you want to just take a look at the big picture, it would be a simple channel structure, really. And I talk about this on the show. How long would it take to get to 465 and change? It could be a matter of 3 to 5 months if the fundamentals are incredibly bullish, and it could take all the way into next summer. So the timing of that is difficult. I mean, you've got channel structures on the way up, presently in the 380s, so forth and so on. I'm not going to get too far into that, but I'll just leave you with this. Closing above 363 and a quarter at the end of any week does nullify that long-term sell signal below it, and the market should then trade higher. And in fact, I mentioned on the show 407 and a quarter within 2 to 3 months. And in fact, that 465 formation that I'll show you here again by this time next year or sooner. And so let's move on then to the November soybean market. A couple of weeks ago, I had a short-term, near-term semantics there, really, buy signal above 901.5, expecting 3 to 5 weeks bullish continuation into the 950s. So this channel structure, 901.5, I mentioned it on the show. It's actually held this week nicely, and above which 952 even long-term resistance remains a big picture target, like 3 to 5 week target. We may actually get there over the next 2 to 3 weeks. 952 even, as I mentioned on the show, is a long-term 3-year descending channel top that can actually absorb buying pressures through the rest of the year. And once we test this formation, this market, the broader soybean market, then susceptible to bearish rotation. Bearish rotation, how far south? Within 3 to 5 months, possibly as far south as the 830s, which I will show you in just a moment. But first, we need to take a look at what are the ramifications if this market does settle any week above this 952 even descending channel top. And by the way, this channel top is dropping, as you can see, every week. And let me show you. There's the 952 channel top. This is more of a longer term chart, actually goes back almost 10 years, does reflect the November 20 contract. And there's that 952 even channel top I showed you a moment ago. This is more condensed. So ultimately, I'm telling my subscribers they should prepare for long-term bullish continuation into the 1140s, I'd say by as a possible summer 2021 high. It could take a full year to get up here. Obviously, there's no certainty with regard to that. There is a respectable, stopping point, if you will, on the way up, presently at 995 half. So let me bottom line this. Closing above 952 even does clearly indicate 995 half within about 3 to 5 weeks, couple of months or so. And 995 half is an area that can absorb buying on a seasonal basis. So we could top out here for 3 to 5 weeks, possibly 2 to 3 months. And from here, the market could fall back to this 952 even channel top. But I'm giving more credence, if you will, to the 952 channel top as a pivot point into next year than I would 995 even. We'd be pushing on to new highs beyond the 961 high if we closed above 952 even. And I think you should just prepare for outright longer-term bullish continuation into the 1140s by this point next year if we close any week above 952 even. Until then, holding below this 952 even channel top maintains a market that is susceptible to bearish rotation into later year, just to let you know. And let's take a look at what the sell signal would be, at least near term. Sorry about that. Let me get back to this chart here. You're familiar with this from a few moments ago, this 901 half channel top. And presently, this is an ascending 1/3 speed line. I'm not going to get into the dynamics of how that is created, but it is based on this low and this high. So it's a dynamic approach. If we push to a new move high beyond this 925 3/4 as of this week, August 24th, then this line changes. It gets redrawn. It's a dynamic trend defining approach. But presently, as long as that 925 3/4 high remains, this is our trend support to the downside, 890 even. So we are bullish. As I mentioned in the show, we are bullish above 901 half. And in the show, I do mention, I think, bearish below 880 something. I forget offhand. Because I've had to redraw this speed line because we put out a new high after the show was put out. So the speed line, this number has changed. Anyway, bullish above 901 half for the next 3 to 5 weeks until we reach that 952 even channel top I mentioned a moment ago right here. And then bearish if we close below 890 even. And this speed line is rising weekly. Next week it's at 893 half. If we close below this speed line, the market has indicated a good seasonal high, and I would then expect bearish continuation to the 832 even area. I mentioned in the show 3 to 5 weeks, could be several months, but I don't have it drawn here, but we have that speed line coming up at 890 even. If we close below it, the market has indicated a good summer high, a good high really through the balance of November contract life, and I would then expect, I say 3 to 5 weeks, that would be quite an aggressive sell-off, could be 2 to 3 months, but in any event, closing below this 890 even speed line right here would indicate 832 even within 2 to 3 months or less, where the broader soybean market can bottom out through winter trade. Finally, let's get on to the broader live cattle market. This is the weekly continuation chart, volume rollover. It reflects the October 20 contract. In the show, I mentioned that we remain in a longer-term 2 to 3 month buy signal above 104.05, which is, once again, a speed line based upon this high against this low. It is dropping every week, presently at 104.05. 104.05 is our base of support that can absorb selling into later year, and above which maintaining a 2 to 3 month upside objective in the 124 handle, this 124 handle channel top, able to absorb buying into next spring regarding the broader live cattle market. Now, we do have little stair-step levels all the way up, and you can really only see those if you could take my 2-week free trial. That will be one way to see these little levels. I'll tell you the 116 handle in this gap area. We've got some channel tops coming up, but overall, big picture, holding above 104.05, expecting the 124 handle before the year is out. Now, what if I'm wrong? I know that I'm wrong at this point in time. Let me just remind you about the 104.05 speed line. I've got other stuff coming up that is trend defining on the way down. So let's take a look at that. This is a speed line currently at 102.07. Now, FYI, I don't mention this in the show because I don't think we're going to settle below 104.05 this week. We might, but I don't see it happening. But in next week's show, I will begin to mention this as a range of support that begins at 104.05 and ends at 102.07. In fact, for the week of Monday, August 31st, it's at 102.07. The following week, it's at 103.27, so forth and so on. It is essentially merging over the next few weeks with that 104 long-term speed line coming down. It is our base of support. Bottom line, bullish into later year above 104.05, and if we settle any week below this 102.07 speed line, which rises to 103.27, the first week of September, if we settle below it, this broader live cattle market has indicated a good summer high, really, I think, through the balance of the year, because we have the speed line analysis is 1/3 and 2/3. You close below the 1/3 speed line, your target is now the 2/3, which is presently 89.35. And what I like about this 2/3 speed line in terms of its significant support and its target below 102.07 is the fact that it's also in line with the high of this low. I like to use highs of lows, lows of highs if they're significant and longer term in scope. And so this is our base of long-term support. If we close below 102.07, once again, at the end of the week of August 31st, don't see it happening. But if so, this market has indicated a good high through the rest of the year, and we should then, over the following 2 to 3 months, continue into the, let's just call it the upper 80s, very low 90s. And that's all that needs to be said for this week's video supplement for After the Bell. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.